Okay guys, today we're going to go over how you can pass a prop firm challenge in one trade. And it doesn't require you to drop 50 lots, and it does not require you to get lucky. We're going to show you exactly how to do it. Let's go. I'm really excited to share this trade with you guys today because this was just incredible. In my last video on gold, I did a full top-down analysis and explained exactly what I was looking for. And as you can see, the consolidation, we're looking at the chart right now, very zoomed out. Why? Because we want to see the whole narrative of why price did what it did with gold. Okay, gold had a rock star week. I mean, we're talking like it went up 64 plus points. Now, if you look at this high here, right here, this was the top of the consolidation range from mid-April. From this high right here, from this high right here, all the way down to this low, we saw a big shift in market structure. Okay, this low right here took out the entire consolidation lows. Okay, look slightly to the left here. You see that there? It took out the lows. We are on the 5-minute time frame, okay, because we're going to be going through what I was looking for after I already did my higher time frame analysis. So this leg right here, which pushed price up into this swing high, this swing low to swing high, was taken out here. You see this gap in price? Well, price had plans to basically violate that. And if we go ahead and zoom out, we're going to bring this box all the way over, okay? We're going to bring it all the way over. And boom, as you can see, the wick purged that liquidity straight through that, okay? We had a reaction. Now, why am I saying this? Let's go to the 1 hour time frame just so we can actually take a look at what framed my trade, okay? So look, here we are, the swing high, swing low, takes out the liquidity. Price comes up, makes equal highs, right? Monday comes in, shoots up, takes out the high of the consolidation. So we already had the low taken out and the high. So we had a new dealing range actually established here. So all I was looking for in my trades was from this high to this low. So now let's get back on the 5-minute chart. So here we are. Price comes down here, makes this low. We're waiting. We're waiting to see sponsorship to the upside. So what I wait for is to see the breakups of structure. Let's go through it, okay? So here you see the equal highs manufactured right here, okay? And it was taken. Pullback where? Fib entry. Fib entry. This was a nice fib entry. Boom, 62%. Boom, gone, right? I didn't take that trade. I was waiting for another break of structure. And I wanted to see more candles close above these highs is what I really wanted to see. I wanted to see this inefficiency filled. Okay. So this was the inefficiency. So here the price comes down and it breaks structure again. It takes internal liquidity and I couldn't help myself. Okay, guys, I said, listen, I'm going to go ahead and take my trade and I'm going to put a 6-point stop. Why? This is a wide stop for gold. I lowered my lot size. This was my indication to say, well, if I get stopped out here, well, then my bias is wrong. My bias is completely wrong. And that's what we do here at Good Eats FX. We don't sit here and throw 50 lots right off the bat, okay? It's okay to have your first lot be your tester lot with a high probability setup. So price comes back into here. Boom. Why did I get in here? It failed to close a candle below this low. So once this candle closed like this, I was in. And that was the end of the story for that entry. My take profit on that trade was to get to these highs. High of the dealing range, okay? So let's zoom in further. Price continues to take internal liquidity but fails to beat this low. So if we were trend line traders, right, this right here, this trend line held up to this point. Now it broke the trend line right here. A lot of you guys would be like crapping your pants right now. Why? Oh my gosh, it's coming. I'm in drawdown. Relax. There's still sponsorship to the upside. Wait for the next day, okay? This is a new day right here. We're gonna divide the day. We were holding that trade. We got in that trade at New York close. So this was a short-term trade setup. All right. So this trend line completely violated. So we're going to go ahead and say this liquidity was taken. Now price continues to move through London. I'm waiting. Look, it came all the way down here. It came so close to tapping my stop loss. I would have been crazy sad, right? No, it didn't. It actually purged liquidity. This is the next morning, New York open session, okay? ICT would call this like a New York open kill zone, all right? From 7 a.m. to 10 a.m., you're looking eyes peeled on the price. So price comes down, purges liquidity. I'll tell you right now, I really, really, really wanted to get in right here. So what I did is I went to the 1 minute time frame. All right, so if you look at the 1 minute time frame, we see that all this liquidity was taken, right? All of this. We're just gonna do it like this, okay? All of that liquidity was taken on the 1 minute time frame. So price takes all that liquidity, comes down into here, fails to take my stop loss. So I'm saying to myself, I'm going to wait for these highs right here, all of these highs to be taken. And once those highs are taken, look, we also have equal highs right here. Bam, son, we got equal highs. Boom. This trend line don't mean anything to me now. All I care about is my equal highs because that's where the money is. So price comes up, takes it. So what am I thinking to myself? Oh boy, the moment it comes back to retest, I'm getting in. I'm getting in. So it comes down here. Did I get in here? No, I did not. You think I'm just going to get in on an impulse move down? No, I'm going to wait for price to retest. It comes back up, manufactures equal highs. You already know what your boy is trying to do. He's manufacturing these equal highs right here. So these weren't equal, right? They were actually relative. This is still resting liquidity. So price comes back down, boom, triggers me in off the 1 minute time frame. And the rest was just history. So now I have 2 entries in and I'm thinking to myself like, oh dear Lord, am I going to actually hold this trade for over a week? Sure am. Okay, so boom, we get to what? The Asian session, right? And I'm looking at myself, I'm like, look at this liquidity here. Oh man, look at the support that we generated right at 9 o'clock. This 9 o'clock Eastern time, it starts selling like a madman. And my first entries, all these entries are a break even now. Okay, so where it sells down, takes out the liquidity, and I'm thinking to myself, I'm like, all right, so this is where the money is. These are the highs these are the highs that they're going to be trying to take out. They're going to continue up. So once this happens, I started to wait again back on the 1 minute. You already know your boys trying to catch those sniper entries. All right. So we get on the 1 minute for that, just for that. We don't sit there and look at price the whole time on the 1 minute. All right. So we're sitting there on the 1 minute. Okay. And this right here made a swing low. It made a swing low. So as this candle closed, I waited for this candle to close bullish, okay? And I said it's going to engulf the candle. It's going to create a bullish order block. I'm getting in on the second candle opening. Boom, drop the standard. It's history, okay? Right there, gone. It just was gone. Pulls back, never comes back. So at this point, I'm like, wow, this is incredible. I'm about to have, what, 3 entries in on gold? This is insane. All right, so now look at this. Now we're going into the next day, and I'm thinking to myself, like, shoot, gold's paying. Let's keep going. Let's keep going. Look at the liquidity that was generated, right? This is what they would call in retail somewhat of a flag pattern, right? I don't really trade those patterns, but I look at them to see where the liquidity is. Price was just generating liquidity, running it. Now, look, right here, they created equal lows. Well, you're saying, Christian, well, why didn't you take the sell here? Because I'm bullish, and gold was not showing bearish momentum. It was showing bullish momentum. This didn't matter. So now this trade right here, you want to know how to pass a prop firm account in one trade? Here it is right here. Bam. Price comes down into the fair value gap. All right. When it came down into this fair value gap, I waited for it to come back up and retest. And I got in right here with minimal drawdown. I'm going to put that up on the screen so you can see this was a real trade. I passed a 10K prop firm account with this. All I wanted to do was get price to get to 1790. So if you look at price, you had yourself a 4-hour bearish order block that we pulled into. And I said to myself, well, I just want to be able to target 1790. If I can get to 1790, I'll pass a prop firm count. And that was it. That was the reasoning behind the trade. It played out perfect, right? Generates liquidity, boom, runs it. Runs that other liquidity. I wait for the retest, boom, I'm in, and gone. Prop firm challenge pass. Incredible, just incredible feeling, guys. Incredible, incredible, incredible. I'm here to tell you that you can do the same. It's not like you need to be some insane 50 lot dropping person. That was a 2.5 lot drop, and it paid perfect. You don't need a lot of points. After that, I laid low, okay? I did not sit here and try to do much. Price expanded. I was in on these other trades. I went to sleep. TP was hit on this one up here and that one, and I just said to myself, I'm just going to hold this trade over here and let's see how far it goes. Well, guess what, guys? This return is still going. Okay, partials were taken, and as you can see, price just has not shifted to the downside. Check this out on the 1 hour time frame. Okay, look at that. Unbelievable. It's just going higher, higher, and higher. Go to the weekly. A lot of trend line traders are saying, well, here's the top, right? This is the top. We're gonna hit a resistance. I'm here to tell you that if you looked at my first gold video, you'll see that we are actually not bearish. This is a bearish channel of price, but we broke structure here. Remember, this was the break of structure. Go back and check that gold video out, guys. Lots of sauce in my video, okay? This was the high that broke structure. So what do we expect when we break structure? A pullback. A pullback. The algorithm in Forex is constantly going, when it takes out a high and a low, it's going to pull back. So this is a higher time frame pullback. And if you look at my other video, if you run a fib from this low to this high, right here, run a fib from this low to this high, you'll see that this swing low was at the 62%, right? Boom, we hit a high. We pull back, and then I'm gonna move the fib now to that major swing low, right? And look, boom, our double bottoms on the daily, 62%, okay? If you look even closer, the pullback right here, 50%. Guys, we're bullish on gold. I see gold 2000. If you're with me, drop a like right now on the video. Right now. Because I'm telling you right now, you want to pass a prop firm challenge? Get with good eats. We're going to do it realistically. We're not dropping crazy lots. We are doing it the right way. So again, if you guys have found value in this video, please check out my videos here, and I'll catch you guys next time.